All right, guys, this is going to be the last. I've done 2 videos. This is going to be the last video about trading breakouts. The first video, just to give you a very quick review, I explained how you want to stick with 90-day breakouts. All right, 90-day, 100-day breakouts. Those give you the best type of probability, 65. If you want to trade 30-day breakouts, be prepared to be stopped out 75% of the time. But if you trade 90-day breakouts, 100-day breakouts, you will have a fair success rate. To increase that success rate, we talked about filters. Filters can increase your success rate up to about 75%. What kind of filters? Volatility filters, ATR volatility. If the volatility is rising, the trend will fizzle out. You want to see a trend where volatility is not rising. So before you take a trade, you want to look at the volatility and make sure the volatility the entire way through is $3, $3, $3, or $5, $5. If you see $3 and $10, that means the stock is going to fizzle out. Does it mean it's going to reverse? We don't know that. Does it mean it's going to continue going higher later on? We don't know that either. But we know that a period of congestion is inevitable. And breakouts and congestions don't go well together, okay? They just don't. Congestion is the worst thing you want when a stock is breaking out, because that'll stop you out. So now that we understood this part, the entry and the maintenance and the filter, let's talk about how to pick a good stop loss for a breakout trade. Remember what I said earlier in the first or maybe the second video, I'm losing track, but I explained that typically, breakouts are in this. When you think breakouts, you think about volatility rising. There's a lot of volatility surrounding breakouts. So when I think about volatility, I think about breakouts, I think about increased risk. That's just how it is. There's nothing you can do to avoid that. If you want a low volatility, you want to stick with pullbacks. But high volatility, big profit opportunities, those have an inherent amount of volatility. So when you have a lot of volatility, okay, you want to have a stop loss that gives you some breathing room. You don't want to just pick a stop loss based on market noise. If the stock, what I see a lot of people do is they see a stock moving up and they just pick up an arbitrary level as a stop loss. And that's not good. You don't want to do that, because they're not taking the volatility and the trading range of the stock into account. What they're doing is, when you're setting an arbitrary stop loss, you are imposing your will on the market. The market doesn't like that very much. The best way to trade a market is to be one with the market. And the way to do that is to take what the market's giving you and use that to benefit, okay? Most traders don't know how to do that. That's what I'm here for. I'm teaching you how to do this. So the markets will teach you. They will talk to you. You just have to know what to listen for. What you want to do is, once again, we look at the Atr indicator. This indicator does not give you any kind of indication of where price is going to go, where price has been. It's a volatility filter. And the best way to measure where to put your stop loss in a volatile trend is with the Atr indicator. This measures volatility to see if you should stay in the trend, if you should enter a trend, and where you should put your stop loss level. So what the Atr indicator will do will measure volatility. So let's say we want to enter right here. The ATR, we measured the ATR here, and we'll say that, for example, that the ATR is $5. That means over the last 10 days, if you took the high and low, high and low, high and low, it would equal about $5. So let's say we're trading a $100 stock and it's moving from $95 to $100, $95 to $100. Then it moves from $100 to $105, $100 to $105. And then it moves from $105 to $110. Even if it's doing that, its daily range is only $5, okay? That's what the ATR will give you. It'll tell you in dollars what the range is. And some traders like to use 20-day ATR. Some traders like to use 10-day ATR. Some traders like to use longer period. I find that 10 to 14 days is the best time frame. If you're swing trading, 10 days is good. If you're position trading, 14 days is okay. You can't go wrong. This is not a maker or breaker. Don't get into the details. Look at the big picture here. But what you want to do is you want to figure out what the ATR level is right around the place where you want to place your stop loss. And if the ATR is $5, for example, if the trading range around here is $5, you want to double that. And your stop loss equals $10. So what you want to do is, when you're entering a breakout trade on a breakout, you want to use the ATR to measure the trend and for stop loss. Now, let me give you a little tip. We doubled the ATR, we checked the ATR, we doubled the ATR, that's our stop loss. Now we know our stop loss is $10, right? What you want to do is you can use that stop loss, you can double it, and that can become your profit target. So your stop loss here equals $5, or excuse me, $10 because we doubled it, and your profit target is $20. So we find out what our profit target is by measuring the volatility using the ATR. And I know this is really messy. Watch the video a few times, it'll explain things better. Measure the ATR, use the 10-day ATR, get a reading of what the volatility is on the asset that you're trading, double it, use that as a stop loss, double it again, and use that as your profit target, and then your win to loss ratio will be 2 to 1. If you can get a 2 to 1, profit to risk ratio, and your profitability is 75%, you are killing it, all right? So if you enjoyed this video, if you learned something about ATR, actual average true range, not actual, average true range, it's an amazing indicator. Nobody's talking about it because it's boring. It just measures volatility. It doesn't give you sexy entries or exits. It's not for that. It just gives you volatility readings, but it's the most powerful, one of the most powerful indicators that I use for a filter, for entries, exits, and figuring out where the market is going to go, where it's not going to go. If you enjoyed this video, please subscribe to our channel. Roger Scott, I'll talk to you guys soon. Tell me how much you like us, hate us, give us feedback, comment. I want to hear from you. Talk soon.